Now, back by popular demand, it's the Lance Roberts Show.
Okay. And good morning and welcome to the show this morning. It is, that's right, hump day. You are halfway there, so just live it, love it. Tell you what, yesterday was an absolutely beautiful day. Started out nice early in the day, but it is Houston, so we got up to about 90 degrees yesterday afternoon, so finally getting past some of these, finally starting to see spring actually show up, because it's spring in Houston when it's 90 degrees, because by the time we get to August it'll be 150. So we're only halfway to summer. So anyway, nonetheless, great day yesterday. A couple of things. Let's kind of jump in today. We've got a few things to get through to talk about, kind of what's happening, globally as well as domestically. Yesterday, the markets did sell off here just a little bit, but again, nothing really too dramatic. We've seen a fairly sharp rise in the markets here over the last couple of days. And really over the last week, we saw this rally of just every day the market was kind of grinding itself higher. And, that's been good news. The 50-day moving average has now crossed above the 200-day. That's a positive thing that gives support to market prices. And the trend of the market remains positive. Now, the one concern here, if there is a concern to have at the moment, is that still as we look at the markets on a basis, volume continues to be just basically non-existent. This really remains a very tight, narrow rally. Participation still remains a concern here. And if we take a look at things like equity outflows, where how many people are buying stocks versus selling stocks, the flows into equities is to the out of equities, right? We're not seeing a lot of money flow into equities. And of course, that's always a concern. We have a market rally that started back in December. It's basically run unabated since December, but we're starting to see some of these ideas where participation is becoming weaker. Also, the markets remain very overbought on a short-term basis. So again, when we take a look at these kind of combination of events, all it suggests is, again, nothing to be overly concerned about here. But as we've talked about over the last several weeks, this probably gets us to the point to where there's not a tremendous amount of upside at this point. We are close back to all-time highs, which again, that's going to be a major point of resistance for the markets. So, if you've got money invested, we've talked about this before, there's just a process of money management, which is simply to take some money off the table every now and then, reap in some of your profits. We talk a lot about investing as it relates to gardening. A lot of people invest money and they stick it in, they go kind of just forget about it. But very much a portfolio works like a garden, which from the standpoint is that when I plant seeds in a garden and those plants grow up and they need to be harvested, if I don't harvest the fruit, harvest the bounty off of the plants, well, the bounty, the tomatoes on the tomato vines or whatever it is that I'm growing, the fruit will rot on the vine. So we have to harvest every now and then in order to reap the benefit of these seeds that we've planted, this garden that we've grown. Also, if we don't weed the garden, get rid of things that are hurting our portfolio, the losers, the laggards, etc. Reevaluate what's going on with our portfolio. The weeds in the garden will eventually overtake the garden. And, if you don't pay attention to it, eventually the weeds will just basically, wipe out the garden entirely. And that happens in portfolios very much the same way. And of course, lastly, we have to, water and fertilize. And that means, adding in new money, buying new positions, repositioning portfolios relative to what's happening in the world around us. So again, while a lot of people tell you just simply, put money in the markets and forget about it, that works well for a while markets are trending higher. But the big issue is when markets tend to reverse, it tends to wipe out and create a whole lot of damage to your portfolio over time, and of course what the ultimate returns are going to be in that money. So again, kind of approach you're investing a little bit like tending a garden. Just pay attention to where what your plants are doing, and where you're making money, where you're not making money. And if you do that, you're going to have a lot better success over time. There was a recent study out just a few days ago. There's a lot of commentary from the media about just buy and hold investing, and active managers can't outperform ETFs, etc. You hear this a lot, and it's a huge fallacy because of the way the study is conducted and the way it's also that it's interpreted. But more importantly is what a new study has found out is that with mutual fund managers, as an example, their picks, the ones that they pick, the stocks they pick, tend to outperform the markets by a large margin over a period of time. What causes the underperformance of the mutual funds relative to the index is what investors do in the fund, the forced buying and selling. And what do investors tend to do? They tend to sell stocks at lows in the markets. For instance, in December the 24th, we had a lot of selling in the market, and that was investors selling out of the markets at the bottom of that decline. Well, when investors sell out of portfolios, that forces mutual fund managers to sell stocks to meet those redemptions. Same thing occurs at market highs. When people are jumping back into markets near market highs, mutual funds have to buy stocks to handle the new inflows coming in because they have to invest that money. So when you look at the forced actions of what happens with mutual funds because of investor actions, that's what has actually created the bulk of the drag in the portfolio by forcing mutual fund managers to buy high and sell low. And that's really what this really comes down to, is not whether or not your mutual fund outperforms or underperforms, it's your own behavior over time. Are you buying at bottoms and selling at tops, which is what you should be doing, or are you doing just the opposite? When you look at what you did or your advisor did or whatever else happened in December, during the month of December, were you selling or were you buying in December? Or were you simply just holding out through this entire decline, hoping to get back to even, which, hey, guess what? Now you've done. You're right back to where you were more than a year ago. So, this is what happens typically over time with money. And again, this shouldn't happen. This shouldn't be the case because, and this is what we do with our clients, and of course, this is what we write about every weekend in our newsletter. So if you subscribe to our website, if you go to realinvestmentadvice.com, click on the subscription button, you'll get our newsletter. And every weekend, we go through this exact analysis, which is simply talking about where the market is, what you should be doing now, and more importantly, what you should be looking out for. Because, again, kind of going back to our garden analogy, right? If you have a garden, and if you have ever actually planted a garden and messed with one, they take a lot of time and effort. It's something you have to pay attention to. But you also have to pay attention to what the weather's going to be doing. Are you going to get a freeze? Do you need to go out and cover plants? Is there a big rainstorm coming that you need to be aware of? Are the seasons changing? Do we need to change what plants that we have planted in the garden? Do we need to weed and fertilize our garden? Well, that's what you should be doing with your portfolio, is looking at what the weather is going to be and then making adjustments to your portfolio to protect your garden relative to that change in the environment. Simply ignoring what's going to happen and just hoping things work out for the best typically don't over time. So those are what we look at here. And again, if you go to our website, we've got lots of articles on this. Simply go by realinvestmentadvice.com. We also have a lot of podcasts and YouTube videos out on these very specific issues. So simply go to our YouTube channel as well, subscribe there. And we'll be right back after the break. More with the Lance Roberts Show coming right up. Don't go away.
Sun on the rain, it be like they are. Come on, baby, hear the reaper. Baby, take my hand, hear the reaper. We'll be able to fly, hear the reaper. Baby, I'm your man. La, 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 la.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertshow.com.